Good evening, everyone. Welcome to today's market debrief. Today's date is the 4th of August 2021, and what we have on the screen right now is the S&P 500 index. Okay, from what we see here on the screen is that the US market is still looking strong, and due to the earnings seasons, a lot of companies are reporting good earnings, and is keeping the index at the high level, near towards its all-time high prices. And it seems to me that the next week it's still going to carry on making new highs. Okay, so that is for the US market, and I've mentioned for many weeks already it is a very strong uptrending market for the US market, and it's because there are too much easy money out there, a lot of printing of money, monetary easing, and we can, as I've continuously shown, that the Federal Reserve has been continuously buying from the open market, and therefore they have all the assets, right, to back them up in printing more money for the whole economy. Okay, so you can see that the trend for the Federal Reserve asset purchase has been on the rise for a very long time. Okay, so this is from the past 1 year, has been always on the rise. All right, so this monitoring easing is what is fueling this very strong uptrend for the US market. So if we look at the Dow Jones Industrial Average, is having the similar pattern as the S&P 500, and Nasdaq, which is even a much stronger index compared to the S&P 500 index, and it's looking strong to me. Okay, so but nonetheless, it has been running for 1 full year without a sizable or big correction, which means to say we have to expect that a correction will come sooner or later. All right, so we just have to be prepared for that. So at this moment of time, if you would like to trade, don't go full big position. You can take half positions or something to minimize your risk on the downside. Now for our Asia market, Hang Seng Index is looking weak at the moment. Okay, and after breaking this support 2 weeks ago, it continuously made new lows due to Chinese government doing a crackdown on big tech firms. Okay, so mainly on anti-monopolistic business practices and their so-called data usage, of consumer data. All right, so what is happening is mainly being pushed by this China, and that is also affecting the Hang Seng Index, because they are somehow connected, and a lot of the Chinese company are listed in Hong Kong also. So that is what is affecting that. And you can see from here the Shanghai Composite Index, it has this drop last week, but thereafter I think Chinese government came out with some news that is not that bad, but it was going to take the next 6 months to set all the regulation in place, for all these big tech companies. All right, so after that news, market started to rebound back up. But what I see right now is this rebound seems to have lose its steam, and most likely we might see some consolidation happening around this area, about 3,350 area. And for our Straits Time Index, what we have today is a rally. Okay, as I mentioned, Straits Time Index is on a sideways movement, but there is a rally today, trying to test its intermediate high resistance here of about 3190. Okay, so this rally is mainly being pushed by OCBC and UOB, and also of course DBS, but the main reason is for OCBC and UOB coming out with their results, which is a very good results, and therefore STI move up, okay, due to that. So I believe in a short term period, Straits Times Index might make new high, from this, as they are still waiting for DBS results to come out. And I believe two banks have increased their dividend rate, so probably investors are also coming in to buy to get their dividends. So I believe that might be some short term strength, for the Singapore index. So what are the stocks that we should be looking at? Okay, so, I've mentioned some of the stocks for many weeks. So for example, this Ascendus REIT. Okay, Ascendant Street have finally broken out of this so-called downtrend line in this big consolidation. So I've mentioned that the 285 to 290 area has been a place of accumulation happening, over the past 1 year. All right, so I've also recommended many times that we can buy here about 292, 293, 294, 295. Okay, and thereafter it rallied until its results shown yesterday, quite a good results. Okay, and their dividends has also increased, and therefore that's the reason why it has this strength to push it higher. Okay, so do note this ex dividend date is going to be on the 10th of August. Okay, very soon. Okay, this is a Manulife REIT. Is denominated in US dollar. What is happening at the moment is after there's this nice rally, burst rally uptrend over the past, like since June, early June happening. Okay, and it has right now been retracing back and retest this downtrend line here at about 74.5 cents. Okay, and it's also testing the 200-day moving average. So I would say that this area, right, this region about 71 to 74 cents previously had been a very strong accumulation zone. Alright, as you can see, most of the price movement are all being trapped in this area. So I would say that is a very strong accumulation zone. And I would say from the looks of this, right, this might, from here, it might start a new uptrend for this Manulife REIT from starting from here 77.5. Okay, so we just stay tuned, and watch out for this. For those who have, still continue to hold on to them. Alright, so at this moment here it puts about 7.3% yield, but we have to double check on the numbers for that, because TradingView does not give really very exact percentage, so we have to double check on ourselves to see whether it is correct or not. Okay, Mapletree NAC, after it hit a high here about 113, 114, and it has come back down to the $1 region. Okay, and from what I see, this $1 to about 103, there has been tremendous volume here accumulating. So I would say this area, right, seems to be another accumulation zone for Mapletree NAC, and the reason for that is because their dividend yield is still quite high, about 6%, and they are still like 80% discount to their book value. Alright, so I would say there is still more upside for this, in time to come. And on top of that, Hong Kong is still having zero community cases, for a very long time, and their economy, from what I heard, friends from in Hong Kong or even from Hong Kong, their news or YouTube, and we can see that Hong Kong is itself inside is fully open. The short-term weakness for Mapletree NAC is mainly due to the weakness in the Hang Seng Index and the China market. Okay, so I believe we can still accumulate Mapletree NAC at around this price, $1. Okay, I've talked about Mapletree Industrial for very long, since 260 to 280 area, and then it had this trust movement the past 1 week due to its earnings, very good earnings. And from the looks of this, I would say over here it might be a start of a new trend. Okay, but just be cautious. It just gave a ex dividend already, and do not be in a hurry to buy into this stock. Wait for a pullback, wait for a nice pullback, and look for a place to accumulate more in these shares. Okay, so this is city development. Okay, previously about 620 is the first previous accumulation zone that I've talked about. Sorry, not the first. That's the second accumulation zone that I've mentioned that we can look to buy about 620 area. The first one was during the COVID time, about 610. Okay, and thereafter, what we are seeing here right now is that we are looking at a third accumulation zone happening roughly about 680 area. Okay, we can see the price has been staying this area or above this 670 to 680 area for the past 2 to 3 weeks. So it might start to form a base in this area. Okay, so we can watch out for this city development. It's a big cap stock, real estate in development, and we know that property prices, not just in Singapore, around the world, are going up. Okay, some of the places are quite hot, and what I've heard or seen is that the US property market is also very hot. Okay, so Singapore is also starting to be hot, heating up, and also called property price index is on the uptrend. All right, so I believe mainly their down is due to their so-called sincere property, their subsidiary dealing in China properties. Okay, so this is the reason why it's been down again. So I believe there might be another opportunity from here to push it back up to about $8 plus again. Okay, what we have here on the screen is the Silver Lake axis, and Silver Lake axis is in a very big base formation or consolidation phase, or I would say more like a accumulation phase. And you can see this red border where it's about 24 half to 25 half is like the main accumulation zone. And what we are seeing here, why is it a main accumulation zone, is that a lot of the volume, a lot of the trading that has been taken place, right, is in this zone, in this area. And a lot of the lows are here, that is happening. Okay, and what we have is the previous spike move is also triggered or started in that zone, 24 to 25 half. So after this spike, it has pull back down and retest this 25 cents area, and it started to rally back up again. Okay, so I would say most likely it is kind of like reaching towards the end of its accumulation zone. And I think due to some news that some private equity firm might want to take them private, and this might start to fuel this Silver Lake axis on the upside, or turn towards an uptrend movement. Okay, so the main thing it has to break above is the 30 cents area. Okay, this zone here. All right, so but looking at this, there are not much sellers left, and I think they are ready to go from here on. Okay, so those who have been holding on to this for the past 1 year, carry on to hold on. We like to see this finally move off. Alright, Thomson Medical is due to some requests that I have to review this stock. Thomson Medical is still trading in a sideways fashion. Okay, there seems to be some distribution happening, and I have not seen any signs of accumulation happening. Alright, so what we can do is just wait, to see how this one turns out. Though there are still some signs, a little bit of signs of accumulation, but it might take some time for this to happen. So at this moment, Thomson Medical will still be consolidating in a sideways fashion. Shen Yao is also another request. This is a penny stock. It used to be Blue Mon. Okay, and I've talked about this stock when it was like 0.4 cents. Okay, and since then it has done a 100% move. Okay, or in less than a month, and right now it's been consolidating sideways. Alright, so for at this moment it's still accumulation, and I don't see any signs that it might continue its move upwards. Okay, so we will still have to wait on this. Okay, it will take some time. The reason for this move upwards is that it has a change of management. There are a group of Chinese investors that came in and took over the company, and they are rerunning the show. They replaced all the whole directors board. They are back to the green again. Okay, so we shall see. Will this do another so-called Blue Mon showing back in 2013 when it went all the way to $2.40. Alright, so we just have to wait. Some penny stocks that are seeing some movement, the place holding. Talk about place holding a few times because of these two rallies. It happened, this rally and this rally, and then it starts to slide back down. So I believe this so-called zone 11 to about 120 is somehow the accumulation zone or accumulation area. How long will they take to accumulate? I do not know, because these are based on the so-called syndicate, or big insider or big investors that are holding to this stock, or they are controlling this company. So at this moment I would say they are still accumulating, okay, when we just wait, okay, and there might be some short-term movement, for another 1 day or 2 days, before it slides back down again. Okay, so we just have to take it 1 day at a time and see how this one turns out. I've talked about Tencent, Meituan, Alibaba, for the past 2 weeks, and some of y'all have seen taken some action, last week, buying near the low, about 420, 430. That's great. Okay, so at this moment, China are saying that they are going to clamp down on gaming addiction. Okay, there are some news they are floating around in the internet, to talk about Chinese government clamping down on gaming addiction, and I do not know this gaming. Does it terms as people playing games, and then they are paying a lot of money and going into debt, or they are talking about gaming as in casinos, online casino games. Okay, so there is a two different meaning to that, and I'm not too sure what are they referring. Okay, so nonetheless, Tencent is quite involved with online gamings, like computer games, apps and all that stuff, a lot of media and entertainment. Okay, but at this moment they are down like 45%. I mean, for a stock to be down 45% is quite huge, quite big. Okay, and how low can it go? As their earnings are still growing, and they are still firing on all cylinders. No, business still as usual. Just a lot of compliance, a lot of regulations to follow. Okay, so I would say it will be a good opportunity to start buying, or accumulating in this stock. Okay, as I can see here, there are a lot of volume that is happening here around the 420 to 440 area. Tremendous amount of volume, okay, as compared to previous years. All right, as you can see, over the past few years, there are not many times where you can see a lot of volume happening. The last time you had such volume is probably back in about 280 area, during the COVID time. Oh, sorry, not the COVID time. It's during the U.S. China trade war period. Okay, so at this moment, it has tremendous amount of volume. A lot of shares have traded hands. Also, I would say this will be a new accumulation zone happening, 420 to 440 area. Okay, so if you like Tencent, this is a price where you can, look to accumulate in this stock. Okay, another stock that I'm very interested is Alibaba. Okay, Alibaba has been down for a long time. It's been down like 40+%, almost the same, almost about 50%. Almost back down to the 170 area, which was its previous accumulation zone. Okay, back in 2020, like the COVID time. Okay, they have this sell down to that area, so that is a previous accumulation zone, and there are a lot of volume, a lot of buying happening. Okay, the first accumulation zone started about in the 215 area over here back in last January, and over here about 200 area, and right now at about 180. We can see all this volume spiking up after so-called government crackdown. All the news on the Chinese government crackdown on big tech firms. Okay, so I would say Alibaba is really now starting to form. I wouldn't say starting to form a base. It has not shown that, but it has shown a strong rally from this 180 area. From 180, you just rally back up to 200 in a very short period of time. Okay, so I would say this is a fierce and hotly contested zone. Okay, 180 to 100 and 190. And recent results shows is quite good, I would say. All right, for such a humongous company, it grew its revenue by 34% year on year, better than last year. Okay, and overall, you can see the free cash flow dropped like 43%, and this is mainly due to the humongous fine that they paid to the Chinese government. Okay, and overall, I would say, if you look at this is something that I'm more interested in, is the cloud computing. So Amazon is the giant in the West. and Alibaba is the giant in the east. Okay, and cloud computing is something where Amazon is quite matured, quite way ahead. What we have here for Alibaba is that they just started out this, like, 4 5 years ago or 6 years ago. Okay, and we can see that their cloud computing space revenue has been increasing, like, 29%, and it's now constituting 8% of their total revenue, which is like the second highest, in all the segment. Okay, their main segment is of course the commerce retail, that covers 66% of their total revenue, and cloud computing is come in as the second highest. Okay, if you compare to the rest of their revenue source. Okay, so I would say cloud computing is gaining, is growing very fast and very rapidly. All right, so I mean, if they were to grow it like as big as Amazon, and I mean, who knows, where their revenues and cash flow will be, in the next 3 to 5 years. Okay, so overall, if I were to bring up this Excel spreadsheet that I've made, okay, you can see that they are trailing 12 months. So right now they only just reported their first quarter. Okay, so if everything is as per usual, as per last year, their revenue is going to be up by 7%. Revenue per share. Okay, that's because of one quarter. There are still 3 more quarters to go. Okay, so if they grow every quarter, like, 7% more, 7 times 4 about another 28 or 30%, so they'll be like growing their revenue like 30% per year. Okay, so that's quite in line. You can see that their first quarter results, their revenue growth is already like 34%. So growing 30% for such a huge company, for them is like quite normal, quite average, and I would say it's a very good effort. Okay, so at the moment their P ratio is roughly about 23. If you are buying at a price of about 197, but if you go down to if you manage to buy it at 180, which I saw some of you did, you're buying at a P ratio of about 20 21, which is quite good, and I would say it's quite an undervalued stock, for a company that is growing so much and you're paying a P ratio of 20. Okay, just a comparison, Amazon right now is trading at a P ratio of 80 times their earnings per share. So I mean, if Amazon and Alibaba are compared, is about the same. It's just that one is listed in the US, one is listed in China. Okay, even though Baba is also listed in the US. Okay, but Baba deals their most of their customer base is in Asia. Okay, so I mean, if for two giants to have similar businesses, okay, I would say they should have somehow a comparable P ratio. Okay, and I've did a calculation. If Alibaba P ratio is at about 80, their share price should be about $600. Okay, so I would say, as compared to the US, their counterpart Amazon, Alibaba is really a undervalued stock. Okay, so as I've mentioned many times, during times of crisis, during times of big correction, it's best to accumulate stocks. Okay, especially such giants or big companies, that has proven themselves, over the past 10 years, that they can grow their revenue per share every single year. They can grow their book value every single year. Okay, so I will say, I'm very interested in this Baba at this moment because it's of its cheap valuation.